Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 26, 2025, and we're diving into Zeta's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Zeta's impressive financial results for the fourth quarter and full year of 2024.
Absolutely. Zeta has reported record financial results, and there's a lot to unpack. Let's get started. Revenue and profitability overview. Let's start with the top line. Zeta reported a net revenue of $315 million for the fourth quarter of 2024, which is a 50% increase year over year. For the full year, they achieved $1.06 billion, up 38% from the previous year. John, what are your thoughts on these numbers?
These are indeed impressive figures. The significant year-over-year growth in both the quarter and the full year highlights Zeta's strong market position and effective execution of their growth strategy. The increase in revenue is driven by their expanding customer base and higher average revenue per user, particularly among their scaled and super-scaled customers.
And what about profitability? They reported a GAAP net income of $15 million for the quarter, translating to a GAAP EPS of 0.06 cents. How does this compare to their past performance?
This is a remarkable turnaround from a GAAP net loss of $35 million in the same quarter last year. The positive net income and EPS reflect Zeta's operational efficiencies and cost management, which have significantly improved their bottom line.
Customer growth and RPU. Moving on to customer metrics, Zeta has increased its scaled customer count to 527 and super-scaled customer count to 148 in the fourth quarter. Additionally, the average revenue per user for scaled customers rose by 19% to $1.87 million, and for super-scaled customers, it increased by 26% to $5.71 million. What does this tell us about Zeta's customer strategy?
The growth in both scaled and super-scaled customers, along with the rising RPU, indicates that Zeta is successfully expanding its customer base and deepening its relationships with existing clients. This is a testament to the value that Zeta's AI marketing cloud provides, enabling them to capture more revenue per customer.
It seems like their investments in AI and first-party data are paying off.
Absolutely. These investments are not only attracting new customers, but also enhancing the value proposition for existing ones, leading to higher ARPU and customer retention.
Cash flow and shareholder returns. Let's talk about cash flow and shareholder returns. Zeta generated $44 million in cash flow from operations and $32 million in free cash flow in the fourth quarter. They also repurchased $31 million worth of shares. How does this impact their financial health and shareholder value?
The strong cash flow generation underscores Zeta's robust financial health and operational efficiency. The share repurchase program is a positive signal to investors, indicating management's confidence in the company's future prospects and commitment to returning value to shareholders.
And their adjusted EBITDA for the quarter was $70.4 million, a 57% increase year over year. What does this tell us about their operational performance?
The significant increase in adjusted EBITDA reflects Zeta's ability to scale its operations efficiently while maintaining strong profitability. This is a key indicator of their operational strength and strategic execution.
Guidance and future outlook. Looking ahead, Zeta has provided guidance for the first quarter and full year of 2025. They're expecting revenue between $253 million and $255 million for Q1 and $1.235 billion to $1.245 billion for the full year. How does this align with their growth trajectory?
The guidance reflects a continuation of their strong growth momentum, with expected revenue increases of 30% to 31% for Q1 and 23% to 24% for the full year. This aligns well with their strategic goals and the Zeta 2028 plan, which targets $2.1 billion in revenue by 2028.
And what about their adjusted EBITDA guidance?
For Q1, they're guiding for adjusted EBITDA between 44.2 million and 44.8 million, which represents a year-over-year increase of 45% to 47%. This indicates their focus on maintaining profitability while pursuing aggressive growth.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting an EPS of 0.09 cents for the quarter, but Zeta reported a GAAP EPS of 0.006. How should investors interpret this?
While the reported EPS was below the forecast, it's important to consider the broader context of Zeta's performance. The company has shown strong revenue growth and profitability improvements, which are critical for long-term value creation. The EPS miss might be a short-term concern, but the overall financial health and strategic direction remain positive.
So, would you say the market reaction might be tempered by the strong revenue and cash flow figures?
Exactly. Investors are likely to focus on the impressive top-line growth and cash flow generation, which are strong indicators of Zeta's future potential.
Key takeaways. In summary, Zeta has delivered a strong performance with record revenue growth and improved profitability. Their strategic investments in AI and customer expansion are clearly paying off. John, any final thoughts on Zeta's investment prospects?
Zeta is well-positioned for continued growth, with a clear path to achieving their ambitious Zeta 2028 targets. Investors should keep an eye on their execution and market dynamics, but overall, the outlook is positive.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Zeta's performance in the comments below.